Okay, folks, we're just at the top of the hour here, so let's get started with our top trades of the week. Quite eventful here as we enter March. As we know, the first week of every month is always interesting. We have non-farm payrolls coming up this Friday. We have some central bank activity this week. It feels like almost every week so far in 2015. We've had some very active central bank activity, and this week is no different. So very, very interesting. So let's get started. So today's webinar will be about 30 minutes, just covering different aspects of what's coming on the docket this week. For those of you who've been in the webinar more than once, as you know, we try to identify here what are the best opportunities. But whenever we go after opportunities, we know that there's risk. So just a quick disclaimer. Every time we try to identify a trade, no matter how confident we are in the move that might occur, the risk of loss always is there. And so, without risk, the reward would also not be there. So risk is one of those things that we know is involved in the financial markets, especially when we're trading with leverage. We want that leverage to benefit us and not hurt us, and we're going to talk about that a little bit towards the tail end of the webinar. But at the end of the day, risk is there, and we always need to remember that, and we always need to make sure that we are preparing ourselves on every trade to manage our risk properly. Many of my colleagues would argue that that's really the key to being in the markets for a very long time and being profitable over the long haul is managing your risk well. So we will help you do that as we move forward. This was our kickoff question from Friday. Actually, if you were in our weekly wrap-up, you saw this, but we're talking about it again today because we actually have this central bank announcement coming from Australia at the end of Eastern Standard Time. It's at 10:30 p.m. New York time this evening, and all expectations are that Australia. Well, I shouldn't say all expectations. There's roughly 60 to 70% chance, depending upon which analyst that you read commentary from, that Australia will engage in another rate cut. So they just recently cut from 2.5% to 2.25%. Okay, which indicated to the market that this was going to be the beginning of some sort of cycle of cuts, and now this is looking to be more so the case with recent unemployment figures coming out of Australia, inflation data coming out of Australia. The unemployment rate the last time around ticked up from 6.2% to 6.4% in Australia. They are losing jobs now month over month rather than creating jobs like we're seeing in the United States. And what's interesting is the Australian dollar has held pretty strong at roughly that 78 level. It's been kind of a stubborn support level to break right there at 78. So why don't we just pull up the platform here quickly, just take a glance. And we can see here the Australian dollar right now, the bid ask right around 77.75 at 77.77. So it has come back down below the 78 level, okay, where again this support has been fairly firm. It's quite interesting. Now I'm just going to make sure we get the chart here. And what are we seeing? When we talk about news announcements, this is a 15-minute chart. Why don't we take a look at an hourly chart? Okay, and so what we're seeing here is some consolidation, right, around this 77 level. And as we've spoken about previously, when consolidation comes in the market, what usually happens next? Well, usually after a significant period of consolidation, there is a breakout of some sort. So how do we play this? We have the announcement coming out. For those of you who have funds in the account, you might be looking to try to make some money tonight, at least tonight my time. So you might be looking to make some money here around the time of the Australian announcement. Our expectations are there will be definitely movements of a significant degree, okay, as this rate cut becomes further and further priced into the market. What do we tend to see? We talk about this phrase, buy the rumor, sell the news. That's a phrase that I've mentioned a couple times in recent weeks around news events because, unlike the Canadian rate cut that came about not too long ago where they cut from 1% to 0.75%, that was unexpected, right? We knew that Canada's the economic data coming out wasn't too rosy, but at the same time, the rate cut was not really factored in very much up to that point. So it was a little surprising. And with Australia tonight, it's a little different, right? The rate cut is actually, there's a higher likelihood of the rate cut happening than not happening. So to me, it's always fascinating when you approach these rate moves, these central bank moves, and the difference in the reaction you can see from the market when there's a greater expectation of a rate, in this case, a rate cut actually coming. And so a lot of times this phenomenon of buy the rumor, sell the news takes hold. And what does that mean? Well, what it means is if most of the market now is expecting this further 25 basis point cut, okay, in the morning, in the Australian morning, what might you see happen? Well, what we're thinking and what we're preparing for, as you know, and again, we also have the webinar high probability breakout trading, but in reality, that's not just a webinar. We really want to, every trade that we place, as much as we can, I just mentioned that there's always risk, right? But so as much as we can, we want to put ourselves in a position where we feel that there's a high probability that we're not only going to win on the trade, but our winner has a good chance of being 2 or 3 times the size of any loss that we're willing to take in search of those profits. And so with a news event, how do I go about doing that, right? Because I know, let's say if I place an entry order before the news announcement comes out, that's become a very popular approach for many traders, and I've seen it now for several years around these news announcements where traders they love to try to place an entry order because, and it's not a bad strategy actually, but because they don't want to necessarily be having to be faced with the situation of trying to place a market order seconds, after the announcement comes out. So they see the number come out, and now they're trying to basically dive into a candle or dive into a big move, which is not always the easiest thing to do. So instead, you'll put down an entry order to buy or sell the currency pair, minutes before the announcement comes out, so that you're basically looking to capture a big move, whatever direction it goes. Now, the better way, in our opinion, of doing that, well, that is actually not a bad way to go, and we've seen traders actually make good money with that approach. You could also find yourself on the wrong side of the trade. And so one thing to think about here is if we know this rate cut is priced in, we're of the strong opinion actually that the Australian dollar will initially rise. So in fact, even though the overall phenomenon of a rate cut is bearish for the Australian dollar, initially, immediately after the announcement comes out, if the rates are cut from 2.25 to 2%, we're looking for the Australian dollar actually to initially jump, okay, by a small amount, probably in the area of 25 to 40 pips, okay, and then resume the downward cycle, then resume the downtrend, which is what we're seeing overall. And this is in line with the concept of buying the rumor, selling the news, right? You have a lot of traders who have been sitting on a profitable short trade for a while. So some of what you're seeing around that announcement when you see that occur is profit taking. Okay, you see a lot of existing sellers getting out of the market. Okay, and it's for a new trader who's still learning the concept of interest rates and how they affect currencies, it can be a little baffling. And I've heard many times over the years, not just with the Australian, not just with an event like this, but really other central banks too, saying like, wait, I don't understand. They just cut rates, okay, and the currency, the Australian dollar, strengthened. And it's like, well, yes, in the very, very short term, the Australian dollar strengthened. A lot of what you're seeing there is sentiment, right? Markets can be irrational, right? We hear that phrase sometimes. Markets can be irrational, particularly in the very short term, right? Because in the seconds and minutes following the announcement, you have a lot of things happening. You have the unwinding of positions that traders are in. You have different orders, like stop orders, getting executed. So the fundamentals, as we call them, that are in play when you're trading a news announcement for the short term are different than what they are when you're trading for the long term. Overall, this continuation in rate cuts is definitely bearish for the Australian dollar, especially if it means that we are, Australia cut from 2.5 to 2.25 not that long ago. It's been less than a month. And now they're actually, again, now going down to 2.2% this rapidly. So if this pace of rate cuts is an indication that they're not going to be done, most likely at 2%. There will be another cut coming later on in 2015. So it's all about the expectations for the future when we're looking at a medium to long-term approach for where the currency will go. So what we like here is to look for that initial retracement, look for that initial pullback of about, however big it will be. A lot of times you see it in the 25 to 40 pip range, and then if you see a retracement back to 78 or slightly above 78, 78.10, to us that's a great opportunity to then get short. So we'll look for that pullback roughly to 78 initially after the announcement, and that's where we feel you probably want to be on the short side of the trade, and look for that downward move. We've been talking about 75 for the Australian dollar for a while now. Big part of that is because Glenn Stevens, the head of the central bank, the Reserve Bank of Australia, has said publicly that he expects the Australian dollar to reach the 75 level by the middle of this year. And so you can't really ignore commentary from the head of the central bank when they're talking about their own currency, because they're one of a select few people who actually have the greatest impact on where the currency value might go, because they control interest rates, or they, at least in his case, Glenn Stevens' case, he has the final say, the final yay or nay on whether rates get cut. So got to pay attention to that. Like we said, it has been stubborn. Okay, these support levels around 77, 75, and before that 78 level have been stubborn. A big part of that is because you might be seeing a lot of long traders with entry orders and stop orders right below those levels. And what that means is, if the pair does break after this retracement that we're expecting, if the pair does break back below 77.50, okay, and you start seeing stop orders around that level, because that is a strong support level, being triggered, okay, that's like pouring gasoline on the fire on the way down, because stop orders on long positions, so traders who are long the Australian dollar right now, as their stops get triggered on the way down, okay, those stop orders are essentially market orders to sell. So the market understands them the same way they understand the opening of a short position, right? It's more order flow on the sell side. So very, very interesting. Expect this consolidation to even narrow out even further here over the next several hours ahead of the basically for the next 8 to 9 hours or so. You're probably going to see the Australian dollar really just flatline at these levels until that announcement comes out, and then get ready for it. So if you have, if you happen to be available, I know that's the late evening on the East Coast, but if you happen to be available at that time, it'll be interesting to have a look at the chart, see what happens, and even if you're not in a live account just yet, you can think ahead. Traders sometimes don't have the time, and it takes it does take a little bit of effort when news announcements to come out to go back in history and we recommend it, and in fact we're actually about to launch a course that talks about this. But if you really want to have an idea of how the market reacts to a certain announcement, what better way to check that than to go back on the chart to the last month's announcement or the previous time Australia cut interest rates. That's the beautiful thing about charts when it comes to learning, is you can go back and you can take a look and you can see exactly, there's no mistake about it, how the market reacted the last time Australia cut interest rates, or in the case of this Friday with non-farm payrolls coming up, how the euro-US dollar reacted the last time non-farm payrolls came out, right? Last time the jobs report would beat expectations. And if you think that it's going to beat expectations again this month, you don't need to look much further than last month to see how the market is reacting to that. And that's very, very helpful to us. It's information we have in our back pocket that helps prepare us for future trades, and we need to use that, because many times in the markets, as we know, history does repeat itself. Okay, so our kickoff question was, do you think the Australian dollar will touch 76 before the end of March? Interesting question. I think our opinion is yes. We feel that although the 78 level has been stubborn and now it's roughly 25 pips below that, once these stop orders from a lot of the long positions that have been on the books there for a while start to trigger, that will accelerate downwards. If we see the next set of Australian economic data that will come out later this month hasn't really improved, okay, there's no indication to show why it should improve, quite frankly. And so that might be, put the writing on the wall that further rate hikes are coming. It's just a matter of when, okay? So something to keep in mind there. So let's pull down our interest rate chart. And this just gives you a little bit more of a picture of where we are with rates around the world. What's why cuts like today that we're expecting from Australia are so significant, because quite frankly, Australia and New Zealand are really the only two countries around the world right now that offer anything of a significant interest rate that should be attractive to attract capital flows essentially from other countries, right? So the big money that's looking to put millions and more than that into fixed income investments. Okay, this is what causes capital flows to cross borders. When you see interest rates consolidating or falling in a certain country, and the expectation that they're going to rise elsewhere, right? Many people are looking at the U.S. come the middle of 2015, the late 2015, as once again finally becoming an attractive destination again for big money to find that for those fixed income investments. Of course, people, countries, and companies will always find the U.S. Treasuries favorable because they're considered a riskless asset, really with zero chance of default, because the U.S. government can always print more money. Okay, but ultimately the amount of capital flows that will come into the U.S. will increase sharply and quickly if the bond market in the U.S. can offer anything of a significant interest rate again, which hasn't been the case for a while now, really going back to the aftermath of the 2008 global financial crisis. So we're starting to enter a period here where the expectation is the U.S. will again become an attractive place for big money to flow in. And what happens when if people have their big money elsewhere, let's say in this case Australia, New Zealand, and other countries, basically to get back into the U.S., they're converting their currencies first, right? To buy U.S. Treasuries or to buy a big corporate bond in the U.S., right? I have to sell the asset that I have in whatever currency it is I'm holding. Let's say New Zealand dollars, and I have to buy U.S. dollars to buy that U.S. Treasury bond or to buy that U.S. corporate bond. And it's really those heavy capital flows that will be occurring over time, day after day after day, okay, for a period of days, weeks, and months as interest rates start to rise in the U.S. That really is what's going to underpin, the U.S. dollar compared to some of its peers. And so when you look at the Australian dollar, U.S. dollar, I mean, it really looks ripe, okay, especially if this rate cut cycle in Australia has any kind of significant pace to it. Okay, the downward move that you can see in the Australian dollar really, makes you think about what the opportunity is there. I actually moved to Australia in 2008, and I'll just, just as a anecdote, in 2008 when I moved to Australia, the Australian dollar was at 63 cents. So for those of you who don't necessarily follow that pair too closely, it wasn't that long, because some people might be looking at the Australian dollar only for a couple of weeks now and say, well, like 78, well, that already seems kind of low to me. Well, I guess compared to where it has been in recent years, in the past couple of years, that's true. But as early as as recently as 2008, it was at 63. So that's about 1,500 points away from where we are now. So, and not to mention when I was there, I saw it go from 63 to 108 to being 800 pips stronger than the U.S. dollar. So the Australian dollar is one of these pairs, whether we're talking about it appreciating or depreciating, either direction, it can happen very rapidly. And we don't see this move discontinuing or do anything close to reversing anytime soon. And in fact, we think the trend will accelerate again on the downward side. So if you're looking for a longer term type trade that you just kind of want to sit on, play the percentages as far as how the fundamental situation looks, Australian dollar is a nice one to have a look at, and that's why we've been talking about it so much in recent webinars. So, and as if we haven't spoken about it enough, we'll just give a quick scoop of the week. This came out on Friday from a JP Morgan analyst. This is when, as in the days leading up to any central bank announcement, these analysts from these big banks really start to weigh in on their thoughts so that traders can really try to identify the likelihood of action or no action when it comes to making a move on rates. So in this particular analyst mentioned, in a fresh change of forecast, we now expect the Reserve Bank to lower the cash rate further 25 basis points next Tuesday to a fresh record low of 2%. Okay, so this is only one of multiple comments out there about this. I mean, if you did your own little Google search on the Reserve Bank of Australia, you're going to get plenty of results today. So if you want the most up-to-date, if you're curious, thoughts on what different bankers are seeing out there regarding this interest rate decision, you can definitely go find it yourself as well. But anyway, definitely for the next 12 hours, this is the big This is the juicy one sitting out there to try to capture some profits on. Okay. And a quick glance at the economic calendar. It's a heavy week, so we just took a little snapshot of what's on the docket here. I already mentioned both of these. So here you see the Australian rate decision, 10:30 p.m. This is in Eastern Standard Time. Okay, you see there right now we're 2.25. Expectation to drop to 2, without a doubt of high significance. And then on Friday, it's already March. So what do we know is the first Friday of every month, 8:30 Eastern Standard Time, non-farm payrolls. Big number, debatably still the most market-moving event month over month that traders try to take advantage of. 250. The expectations here show 257,000 jobs to be created. This particular analyst sees that coming in at 240, so slightly below expectations, but still very strong. And then consequently, the unemployment rate falling in the U.S. from 5.7% to 5.6%. So plenty to take advantage of here. If you're not taking advantage of tonight's Australian announcement or don't look to do that, you might be considering Friday, because Friday is, I know I love to get involved when it's non-farm payrolls, especially when we see the job creation side of the story with the U.S., because right now we're just seeing this depressed environment in places like Australia. Canada is seeing not great numbers as well. So really what makes non-farm payrolls attractive is when you see the diverging numbers from two different countries, because that's really what us, for currency traders, that's what opens up, that's what gets us excited, right? Because we love when the story is in opposition, right? When you have one country that economically is not doing well and another is starting to really rise, I mean, that makes for a currency trade that is more transparent, okay, and in many cases have more momentum to it. So U.S. dollar, Canadian dollar is another one we talked about, another one that has faced, in this case, what we call resistance rather than support, because with the U.S. CAD, U.S. dollar is actually quoted first, the Canadian dollar quoted second by convention, okay, for trading. So that's another one to keep an eye on this week. Don't really have a recommendation there. We will be talking about that more tomorrow in my colleague Matt's webinar. We're going to get a little deeper into the Canadian dollar. So we're just about a few minutes away from the end of the webinar today, but we always talk about money management because so many new traders come into our webinars week to week that we really like to give a mention of the use of stop and limits and protecting your account. At the end of the day, we're here to make money, but part of making money, definitely over the long term, is protecting our account in the short term, right? And we always need to, on any given trade, we want to make sure that we're protecting the lion's share of our account balance, okay? And we're only, traders have different risk profiles, so I really don't like to put a number on it. But in my case, I never really like to expose more than 2 to 3% of my account on any given trade. Sometimes maybe a little bit more, but in general, as much as I would love to win every trade, I know that that's not going to happen. I've been in the markets long enough. Maybe if you spoke to me 15 years ago when I first started dabbling in the markets, and I didn't have the experience under my belt that I have today. I was much more sensitive to losing trades and trying to win every trade and less accepting of losses. Okay, but I know I've learned enough now from experience to tell me that I know losses will occur, and because losses will occur, I need to protect my account balance. I need to make sure that my losing trades are much smaller than my winning trades, and if I do that, I'm in good shape. I'm in good shape. If I have a losing trade on a given day, I know that I'm there. I will live to fight another day, right? And that the lion's share of my account is still there. There will be more opportunities, and especially in today's markets in 2015, some of these trades that are out there for us to take advantage of, look really juicy. Traders are licking their chops these days because they see this diverging interest rate environment around the world. And they want to take advantage of it, and that's who can blame them there. So we're here to help. I think the best thing that we can do for our clients, and I think my analyst colleagues would agree, is help you manage your risk well on a trade-to-trade basis. So more than anything else, yes, we love to talk about the markets, love to talk about these economic announcements. I mean, they're really fun to watch, and it's even more fun when you make money off of them. But I think where we also, I would say, where we provide you the greatest bang for the buck as your broker is in acting as a reminder system to you and a sounding board. Really, many times traders like to ask us, well, I'm looking at this trade. This, it might not even be the Australian dollar. It might be, a trade on oil or gold. and they just want to ask our opinion. I'm looking at this way. I'm just curious if you're seeing it the same way. So in those cases, we're really just acting as a sounding board and a reminder system of, okay, great, I do see it the same way you do. That trade looks really ripe for a nice little profit there. What are you thinking about on the downside? How much are you willing to risk to go after those 50 points in gold or whatever it is? And sometimes your trader's like, oh, well, I didn't really think about that. I didn't really think about how much I was willing to risk. And there we've kind of done our job. We feel we've helped you. Yes, we give you our feedback, our opinion, whether we see eye to eye on a particular trade. But we always will say, what are we risking on the downside here to capture this profit? And that's, I think, I've observed that's really where our traders come to find us to be helpful. So keep your eye on stops and limits. If you're very beginner, actually a recent update is we now actually offer an online course. That's the first semester of that starting next Monday. So if you're very, very novice to the markets and you want to get some more education under your belt beyond what we have the time to really do in these webinars, we are going to be offering an online course that's partly self-study. It does involve homework and quizzes and things like that. And the first semester starting on Monday, there will be a new one every single Monday. It's a $30 US course, so it's very reasonably priced, and it's really just intended to empower you and really get you going in the market as a new trader, because we see so many beginner traders sometimes get frustrated because they don't feel like they're learning fast enough, and sometimes a structured setting like a course is really maybe the best place to get started. So if you have more questions on that, let us know. We can let you know more about that. But as far as accounts go, okay, top trades of the week, you're here. That's it. Primarily for live accounts or people very close to that. So happy to have you here today. And when you get funded, I think our account types have pretty well known. Gold is 2,000. Let you chat us on Skype. Some traders really try to make the most of that. So chat with us almost every day. Platinum account is more personalized, more one-on-one. We will go into further detail. We'll look at your trades. We'll really, get down and dirty with you on every trade that you place. And as far as even going into personalized webinars, if you think you would find that beneficial. And many traders, when they open an account, do bring a friend along because, it's a sounding board. No better sounding board than somebody who you can talk to face-to-face about the markets or over the phone, somebody who knows you well, kind of knows your personality. That's always a valuable person to have side by side with you when you're trading, because they can maybe identify certain patterns, especially when you might have maybe a small losing streak, kind of bring you back to center. Sometimes when we have a losing trade or maybe two losing trades in a row, some of us, myself included, have a tendency to, try to make back those two losses in one trade, and so a lot of times when we try to make back, a bunch of money in a very short period of time, we're inherently also willing to take on a lot of risk in doing that, and we have to, come back to center and make sure that we're being patient and remembering that, the market doesn't have any sympathy. The market doesn't remember that we lost two trades in a row, right? The market's not just going to hand us back, the full amount that we just lost in those two trades. We have to stick to our system of risking less than we're looking to make on every trade, okay? And so, sometimes having a friend or a colleague involved in the markets with you is a nice way to go to help get that done, and we will pay you. So talking about money, we actually pay clients for the referrals that they bring, both in the short term and the long term. So just something to keep in mind. We have more specifics on that if you haven't already been made aware of how that program works, but it's a great one, and people really try to take advantage of it if they can. And so at that point, we're talking about making money here, making this into a business, second income, third income, whatever the case might be. The markets are more and more, I think many more people from what we're seeing in our conversations are looking at the financial markets as a place to make more money. We're here to help you do that. That's our primary goal, so that we're not just talking to you in today's webinar, but we're talking to you a year from now, as you're trading your account. And that's what we want to see with every client that we have, is a relationship that's for the long term, that's really a win-win. So with that in mind, we are just about out of time. So I would like to wish you farewell for today. It is just the beginning of the week, so we have a lot more coming up. We're going to have to save our energy for this week, especially if we're going to stay up some late nights to watch some of these announcements that are going to come out. And so for everybody here at Currency House, I hope everybody has a great week of trading. I'm sure we'll be in touch with you individually as we always are. And so I wish you a great rest of the day wherever you are in the world, and we look forward to speaking with you very soon. Have a great day.